Good afternoon, everyone. Good afternoon, everyone. Myself, CA Raj Chawla, organizer of this today webinar on private equity and finance through AIP, rupees 50 crore to 2000 crore. And today we have with us CA Yash Garg. He is the main speaker on this topic. Also, we have with us CA Sachin Dargan. He is also ex-banker and expert on working capital loan and other fundings. Also, we have with us CA Vijay Kapoorji, a very senior chartered accountant, ex-banker, and very expert on geopolitics. So, first of all, I welcome you all in this today webinar. And today, we will cover what is private equity funding and how does it work for corporates. The second question will be eligibility for entities for private equity funding, Mainboard IPO listing after private equity funding. What are the advantages and challenges for private equity funding? Valuation mechanism for private equity funding. Benefits of listing through Mainboard IPO. What is finance through AIF and how does it work for corporate? Type of AIF in India. Eligibility for entities for finance through AIF and repayment norms, and what are the advantages and challenges of raising through finance through AIF. And also I request all of you, if you have any query, please write your query in our this Q&A column. We will take up after the deliberation from our faculty. So first of all, I will request CA Sachin Dargan ji to please give his opening remarks.
Good evening, everybody, and thank you, Raj sir, for giving me this opportunity to speak on this platform. So, introducing myself, I myself is a chartered accountant, but I have been involved in the banking industry since beginning. So I haven't done the traditional practice like taxation or auditing, but I have been involved in all the loan products for the MSMEs and the other businesses. So I'm a partner in Big Pocket, and we generally arrange funds from all the banks where we have all the tie-ups, and we also involve all the ex-bankers in our platform so that they can also help others to arrange the funds in case we have that in case we are not in that position. So we are primarily involved in private banking or loan products from private banks, but at the same time we are coming into the government government banks also. Now I would like to request Mr. Yash from Nix Advisory to explain everything about the IPO and the private equity, which is his main stream.
Thank you, Sachin ji. Before that, I will request CA Vijay Kapoorji to please give his opening remark. After that, Yash ji will take up the full session. Over to CA Vijay Kapoorji.
Thank you, Rajiv. I will not like to steal Yash's thunder, as I am very eager to listen to him today. But just by way of background, I've actually worked overseas for about 25 years. I've worked in London, Singapore, Switzerland, and all these places, and hence my knowledge and interest towards geopolitics. So what happens is that my understanding of this subject is that while a lot of chartered accountants are, experts in audit, taxation, helping their clients in their day-to-day affairs, but sometimes, it is like we are building the best real estate project somewhere where there is a propensity to have earthquakes. So I will just leave you with three predictions or thoughts, if I may use the word. Uh, According to me, by 2029, $1 will be equal to 3 or 5 rupees. Okay. Another prediction that by 2040, Iran will become a Christian majority nation. So, if you'd like to know more about these subjects in detail and as to what my thought process and why I say these things, then we will obviously cover it in more detail in the next session, as and when Mr. Raj Chawla, is able to schedule it. But I think currently the need of the hour in every business is to get money to expand their business. So over to you, Yash, and I am looking forward to listening to you.
Thank you, Kapoor Saab. And definitely we will have your experience sharing with our members. So over to CA Yash Garg.
Thank you, Vijayji. Thank you, Raj Chawla sir. So today we are going to cover two topics primarily. So three topics actually. One is funding through private equity firms. Second is funding through AIFs. And whenever we avail these type of fundings, we have to provide exit to our investors. Okay, so primarily the exit happens through IPO route. And it can be a Mainboard IPO or it can be a SME IPO. So for in case of SME IPO, the private equity transactions generally don't work. So private equity works only for Mainboard IPOs. So now we will cover all the questions that have been mentioned in the emails circulated by Racha Vasal's team one by one. The first question is what is private equity funding and then how does it work for corporates? So private equity funds are interested to invest in growth stage companies. Okay, so companies who are growing from last, let's say 3 to 5 years or from last 10 years, and now they are stuck with their expansion capital or they are stuck with working capital, then private equity comes into the picture. So generally, private equity transactions start from 50 crore, then it can go up to 500 or 1000 crore. Okay, and you can call it a pre-IPO funding also, or private equity, or we can give it any name, bridge round, or etc. etc. So when do we need private equity funding? So there are 3-4 scenarios majorly. One, when promoter has put in everything in the business, okay, and taken loans by giving collaterals, everything, and still the expansion is required and there is no sufficient money, then you go to private equity. That is number one. Number two, there are times when the companies are growing at a very fast pace, okay, to manage that pace, private equities are required. Like the recent example is funding raised by Lahori Zira through Motilal. So they raised around 300 crore. Okay, and when the company was doing a business of approximately 350 to 400 crore at a near valuation of around 2800 crore. So that is second example. Third is when a company feels that it is not IPO ready, but they need funds and they would be ready for IPO in let's say 2 to 3 years time, and they don't want to do IPO right now because they feel the valuation is lower or some growth is pending. So in these type of cases also private equity people invest and then they have a uh, tenure of 2 to 3 years. They wait for it, then they plan for IPO. So in terms of sectors, so in which all sectors private equity transactions can happen. Generally, and these transactions are sector agnostic. It can be so a couple of sectors like infra, real estate, healthcare, pharmaceutical, manufacturing, IT, OEM, solar power, module manufacturing. So it can be e-commerce, it can be FMCG, FMEG, defense, drones. So it can be any sector. So now out of this, the key takeaway is so private equity can work for any company who is at a growth stage. Minimum transaction size has to be 50 crore. Okay, and in pre-IPO, the transaction can go up to 500 to 1000 crore. So IPO funding will be separate. Then IPO can be anything between, let's say, 500 to 5000 or 5000 crore. So this is how the private equity transactions work for corporates. And
So
so
Yashji, I have a question from audience behalf. Do we have any, so when a private equity takes place, an investor comes and, does an agreement for a private equity, is there any exit route also which is defined at that point in time, that after so many years, at so many percentage, they will take exit, or what? If you can explain on that.
Yeah, so there are four types of exits that can happen for a private equity. Number one is private equity player sells its equity in open market. That is number one. Number two is secondary sales, that he brings a second investor or a larger investor. Third is a strategic sale. And fourth is IPO or slash offer for sale, where the private equity offers its equity for sale in IPO. Like a recent case, we can say Vishal Mega Mart. So Vishal Mega Mart came with an IPO of 8,000 crore, and it was purely for the exit of investors. So these are the four routes. And yes, there are performances which are being mentioned in the shareholders agreement, that these are the numbers that need to be achieved, okay, which are given by the promoters after due diligence. And in case, let's say, company degrow or things are not in favor for the industry or promoters, so let's say the business of the company goes down and company needs to raise funding in future, let's say after 2 years, and they raise equity at a lower valuation than the earlier valuation. So in these type of things, so generally private equity companies, they increase their equity according to the new valuation. So this is generally the clauses, but you can say these type of things happen in 20% of the transactions.
Okay. Right. And we have got a couple of questions also. So would you be okay if we can keep on asking questions parallelly as you are?
Yeah,
That would be great, right? Otherwise, it will be a piling up of questions if we'll take it up, after one
sure,
and a
sure.
half. So the first question from Ramesh Thakurji: how do we find private investors? So can you help us finding the investors? Because many chartered accountants are basically doing their traditional practice, but obviously they would want to get into it. They have their own clientage and they generally ask these questions, including myself. So how can you help find, private equity investors?
So there are two answers to it. One, first, we also invest from our book. Okay, if we like a company and we feel that we want to be a part of it in a long-term journey, we can also invest. So from our book, we invest up to 5 crore. That is number one. Number two, we have a group of friends, or you can call it investors, who are working as who are investing as HNIs, or they have created their AIFs, or they have companies in Singapore, Middle East. There are a lot of people who are working with us, and where we invest together. So let's say investment opportunity comes for 200 crore, and we just want to put 5 crore or 10 crore. So then to complete the remaining amount, we have a group of investors. So yeah, we can help with finding the private equity investors. There's no issue in that.
Right. Another question from Chaitanya Agrawal: does private equity investor provide seed funding also for new startup having idea but no money? Could you suggest some name of the private equity investors?
No, so first answer to this question is no, private equity players don't provide seed capital. So, but I can explain how the seed capital works and what should be the strategy. We don't get into seed capital or stress capital. So, generally, seed capital is being funded by HNIs or venture capitalists. And in 90% of the cases, 90 to 95% of the cases, these fundings are for technology startups. So when it comes to technology startups, so there are two types of founders which are required generally for to avail this type of a funding. One, either you have a background that you built some startup earlier, okay, which gives you credibility so that you can raise funding in the next startup. Second, if you have a background from IIT or something like that, okay, that helps to raise these type of fundings. But private equities, people don't invest in seed stage companies. It is always through HNIs and VCs.
Right. We have another question from Atul Jindal. Does government help or provide seed funding through DPIT startup portal?
So I'm not sure on this. This is not my topic. So equity funding through government, I have not heard. Maybe they are giving some grants. So I know companies who are setting up their plants here and there in different states. They get subsidy. Subsidy is in the form of GST refund or on certain capex to be refunded. So these type of subsidies I have heard, but I have never heard that government is investing in equity of a company.
Okay. Right now, yes, you can go ahead as per your plan of things. I think there are the next question, maybe eligibility for entities for private equity funding. I mean, who all are eligible and what is the criteria? What investors look
Yeah.
into the entities?
So, private equity transactions are fairly large transactions, okay? And so these people look for companies who are little settled and mature and operating from last couple of years. So generally they look for a EBITDA of 50 crore, or let's say a PAT of 30 to 40 crore. That is number one. So let's say a company has a turnover of 300 crore or 400 crore and it's doing a EBITDA of 50, 60 crore. That company might be eligible in terms of numbers. And second, in terms of percentages, they prefer that company should have a EBITDA of at least 25%, which is operational profit, okay, after everything, and at least a double-digit PAT of 10%. So any company performing in sectors like infra, real estate, healthcare, pharma, manufacturing, it can be any sector, who has a EBITDA of more than 50 crore is eligible for basic due diligence from a private equity player. And in these type of companies, again, the investment size can be 50 crore to 1000 crore from a first tranche perspective.
Right. So you are saying that you need at least 50 crore of EBITDA or 10% of PAT, which you said. So you are talking about the last year audited figures, or you are talking about the trend of the last, say, 3 years or 4 years?
No, so last year will work. So, but it shouldn't be like this that earlier it was 2%, now it has been increased to 10%. So it obviously it has to make sense. But I'm talking about last year numbers. So let's say the recent year which has gone is 25. So this can be applied to financial year 25.
So like Nick's advisory, I think help also if somebody wants to get into the private equity from, say, traditional debt to the private
Yeah.
equity. So would you
Yes,
be
yes.
helping in terms of consulting the company to, to keep their ratios as per the standards, right?
So yeah, so like I mentioned earlier also, since we invest along with all the large investors, so we have access to all the large investors and private equity firms operating in India. So we can help in any type of transaction. So there is no issue.
Right. I have couple of more questions. Government has a startup seed fund and can provide grant. Okay, this is the reply which Tarun Lani has done. And then Ramesh Thakur has asked, can you suggest some PE investor firm in infra sector and real estate and how to approach them?
Uh, so there are many firms. You can talk about Abacus. There is Pentomath. There is Choice, Share India. So there are many firms which have created their AIFs, and there are many investors based out of Delhi also, which can be approached. So you can approach them directly also, since I have mentioned names, or you can approach them through us also. So if you can tell us what is the size of transaction, what is the size of company for which you are looking to raise equity, I can help you right now.
Sure. Now, I think the questions are not there, but you can carry on with your scheme of things.
Okay. Yeah. So I have just explained eligibility criteria for private equity funding. Then so Mainboard IPOs listing after private equity. So whenever private equity players invest in company, so they wait for 2 to 3 years to get the company listed, and then accordingly they plan for their exit. So generally their exit is by way of offer for sale, so which means a secondary sale of shares in IPO. So IPO has two primary fundraisings. One is primary sale of shares. Second is secondary sale of shares. So against primary sale of shares, the money comes in company, and against the secondary sale of shares, money goes to the investors or promoters. So this is how private equity players plan their exit. So after this, there are what are the advantages and challenges for private equity funding. So obviously the advantages are access to capital, and it is a capital on which you don't need to pay interest, and you can unlock value of your shares, so which generally cannot be done through banks or banks or NBFCs. So, and the challenges can be when the company is not performing or the sales have started going down, then there are certain clauses in private equity shareholder agreements. So that in case the performance is not there up to the mark, or it is not up to the mark, or company raises funding in future at a lower valuation, then they need to compensate the previous investor, and they need to issue equity accordingly to the old investors also, so that it is not unfair for them. So this is broadly a challenge. Okay. And now the next topic is
Yashi, we have a couple of more questions. Uh, so the question is how to get funding from 5 crore to 50 crores. I think this question belongs to both you and me. So if somebody
can
wants to asking in IPO context or private equity context, I think Yashi is the right person to
I think
reply
first
on
you can
this.
answer, then you can answer from debt perspective, I'll answer from equity perspective.
You can answer first, and then I'll take it up for this for that perspective.
So 5 to 50 crore, so up to 50 crore can be raised through HNIs or AIFs, there's no issue. So up to 50 crore can be raised easily through HNIs, and there are a lot of AIFs and FPIs which can fund this type of amount.
Right. So from that perspective, I think the person who is asking from 5 to 50 crore anywhere between this, they can go for to the bank, or they can come to us and we will arrange funds from banks itself. The fund can be in the form of working capital like cash credit limit, or maybe in the form of project financing. If a new project is being installed, it can be a greenfield project, it can be a brownfield project also. So brownfield project, I'm sure everybody must be aware of, where the client is already working on a particular segment, and now they are either extending the same business or they are going a backward integration and they are setting up a new plant. We'll call it brownfield project. So we can arrange funding for that. There may be products like loan against property also, where nothing, no compliances are have to be there too, and it is only based on the property collateral. So the collateral value would be more than the debt involved here in loan against property. But in case you go for project funding, then you can give us 30 crore of say 30 CR or 25 CR of collateral, and against which the bank can extend a limit of 50 CR also. So that was all about debt funding here. The next question, yes, ji, is please share the AIF name on chat.
I have already shared.
Okay, you shared it. Uh, Then
Have you shared for 3, 4? So there are many such names.
I have some group where funding is required. So I guess you have already replied. You can reach out to ESG on this.
I think there is one question on bank funding will be secured or unsecured. I think Sachin ji, you can answer to this.
Bank funding, yeah, it can be secured as well as unsecured. There are a lot many products which even bankers are not aware of. There are banks which one bank is offering a product, the other bank is not aware of. So we are the ones who consolidatedly do everything. So that is the reason we are aware of that there may be 5 to 10 products which can be unsecured, like CGTMSE, you must have all heard, but there are other than CGTMSEs, there are 4 or 5 products are there which you can, get it unsecured. And in secured also, secured, everybody knows that a secured product or a, funding may be against a machinery, it may be against a collateral, it may be against the FD backed funding. So there are a lot of things. I think this is a vast area which will take a whole session for me to cover. So anyone who wants to ask about the debt funding, maybe secured, unsecured, we can contact me also on my mobile. Yeah.
So now the next topic is a valuation mechanism for the private equity, but it is a very subjective matter, and it depends on sector, the kind of growth the company is achieving, the kind of profitability the company is generating. If it is higher from the peer group, the valuation will be higher. If it is lower from the peer group, so the valuation will be lower. Then it will depend on a couple of ratios like current asset ratio, current asset to current liabilities, then debt to equity ratio, the background of the founders. So these are type of things matter a lot when we look at a transaction from a private equity perspective for the valuation. So generally, private equity players prefer to come at a minimum valuation of, let's say, 500 to 750 crore, so that they take 10 to 15% equity in the company in the first round. And so whenever the IPO comes, so Mainboard IPO is for 25%. So after dilution, they are at least standing at least 10 to 12%. So this is one of the condition for private equity firms, that they look to get at least 10 to 15% equity in the company. So after this, the next topic is the benefits of listing. So as explained, benefits are, the first is access to capital, which cannot be generated otherwise through banks or NBFCs. Second, you unlock value of shares which are just lying in paper form. So when you plan to raise equity, so then they become an asset for you. So third, so when the company gets listed, the shares of the company can be used as a collateral for taking loans from banks. And there are many AIFs which are operating in India, which give you loan against the listed shares. So listed shares become as a collateral, and they can be used to raise further loans. So then listing also help you with more credibility for customers, vendors, employees, and more trustworthiness amongst everyone the company deals with. So these are the few benefits for Mainboard IPO.
Yes, ji, there is a question from Rajiv sir, Rajiv Chawla ji. In case of any shortfall in target, does PE demand compensation?
No, 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 no. They don't do such things. So so in case of are such funding because of new growth in terms of PE, where is it? Okay. Can I read this question, Sachin?
Yeah. Rajiv sir has written at 428. In case of any shortfall in target, does PE demand compensation?
No, the one word answer is no. There is no such thing that they have to take compensation. So generally the clauses cover the minimum return on their equity. So it can be anywhere between 15 to 20%. So that this is what promoter has to commit. But in case of shortfall, so it is not like that they start demanding compensation from the client.
Arvindra Singh is asking, what is the main extra legal compliance apart from ROC income tax after IPO? So obviously there must be more compliances, which I think SEBI is the one where you have to comply with. So can you elaborate on this?
So there are no as such compliances, to be very honest, but you have to be a little diligent in operating the company. So one cannot take money out or put money in. So it has to be routed properly through company secretary, which is being employed as an employee of the company after listing. So because that is a statutory requirement. So for personal transactions of the promoter, so promoter has to be cautious that how he can take the money out or put the money in. Okay, that is number one. Number two is quarterly PNL. You have to report your quarterly PNL and balance sheet in the quarterly PNL, sorry, to the exchange. So after end of the quarter, within 45 days, you have to disclose your number. So this is the additional requirement for all the listed companies. In case of SME IPO, the reporting happens after 6 months. But any SME company can choose for a quarterly reporting also. But generally, it is 6 months.
Right. We have another question. What would be the initial cost of PE, your service charges? I think that would depend on case to case basis. Is it?
It is no. I think it is very difficult to answer.
Yeah.
Uh,
In case of foreign funding, RBI compliances are there. I mean, I couldn't understand the question. Sunil Dutt has asked this. In case of
how
foreign
many
funding.
private equity fundings you have done and amount involved? Further, what are the clauses in private equity one should be careful as a promoter? So we have done close to 30 transactions, and the transaction volume you can say is between 50 crore to 750 or 800 crore. Okay, so that is one. And what one should be careful about it. So see, if the numbers that you have given to private equity firms and you're achieving that, there's no nothing to worry about it. So they are just bothered. So the private equity firms are all financial investors. So they are just bothered to make money from the amount invested. So they don't get into business as such. So till the time the founder is performing and everything is going as per the target, little here and there doesn't make any difference. So there's nothing as such. So there are few clauses like tag along, ride along, okay, minimum return. So these are the clauses that you can get through your lawyer.
Right, Yashji. I think now we would want to know much about the AIF which you have told. What exactly is this and how it is different from the IPO and private equity?
So there are, I think, two, three questions in case of foreign funding, RBI compliance for if funding is coming from outside India, so it is a FEMA compliance. So you need to do FCTRS or FCGPR. Take care, that is it. What would be the initial cost of fee, your charges, etc., etc. How many times of EBITDA is being taken for the valuation normally? So, so I'll answer to this question for Harjeet. So Harjeet, so when it comes to M&A, so EBITDA multiple could be in the range of 6 to 8 for valuation. Okay, so when somebody has to sell the company completely or exit the company 100%. So generally it is in the range of 6 to 8%. But when it comes to raising funding for equity, where you're diluting just 10 to 15%, then valuations are always higher. In case of M&A, when a promoter wants to exit, valuation is always lower. In case of fundraising for the company, valuation is always higher. So now the next is private company is able to take fund from equity funding. Yeah, private company can raise. In fact, only private or public company can raise. Partnership firms or LLPs are not eligible for funding. Generally, nobody invests in partnership firms. So after this, the question is, what is the minimum and maximum percentage of stake sale investor take? Again, very subjective. So it can be starting from 50% and then it can go up to 65%. So depending upon the stage at which company is standing as on date. That is a very subjective answer. And now next question is, how much time do you think it will involve in answer from investor? Yes, no. In case of no, what is the cost to be incurred? So if it is just a no, I think there's no cost involved. And how long generally does it take? You can say 2 to 3 weeks. Within 2 to 3 weeks, you get a primary interest, initial interest from the investor that they want to go ahead and look at the data. So now after this, it is beyond IPOs. What structured exit options are mostly commonly negotiated in AIF-led private equity deals? And how are you seeing GIFT City evolve as the gateway for international LPs to co-invest along with? See, there are four options, as I have explained earlier, for exit of private equity players. So first is IPO and slash OFS. Second is strategic sale to some other investor. And third is secondary sales, again to somebody else. And fourth is sale in open market, where company is not able to give exit to the investor and it is also not able to list on any platform. Like the recent example is, you can say, Oyo Rooms. So Oyo Rooms share is there in the market because the company is not able to list itself and it is not able to give exit to the investors. So in such scenarios, private equity firms, they start selling, offloading their shares in the market. So now the next point is, what should we take care before SME IPO? So for SME IPO, one has to take care of eligibility. That because these days there are a lot of IPOs which are getting rejected and returned by the exchange. So it is very, very necessary to understand whether the company is eligible for IPO or not. Okay, so you now broadly for NSE and BSE, the requirement is same, and it is very critical to evaluate that the company should be eligible for IPO. And apart from that, one should get financial due diligence and legal due diligence from a merchant banker. So it will really help before going for IPO, for a SME IPO. So now after this, the question is, can a company raise money? Just a second. Can a company raise money through IPO for paying bank loan and extra working capital? For repaying bank loan, yes, the money can be raised. People raise money for repayment of their debt. For working capital, there is a limit to raise capital, because generally SEBI doesn't promote the companies raising 100% of the money for working capital, but there is certain percentage, 15 to 25%, that can be used for working capital. So next question is, in a situation, manufacturing, auto components, excellent track record, great prospect, present turnover 100 crore, highly profitable, EBITDA 18% in 3 years, 300 crore EBITDA gross 20%. What is the expected valuation? So we can discuss this. It is very difficult to give a valuation here. But Rajiv Chawla ji, we can discuss this. I hope you have my number. So I'll share my number here. So then what we can find, where we can find the eligibility and other terms for SME IPO and latest notification. You can get it on SEBI website. So everything is there. Or you can go to Chittorgarh to have basic conditions. Or if you want it from my side, I'll share it with you. There's no issue. So then Sunil Datji has a question. My experience is that we did not commit any return of 15% as mentioned by you, but exit only by IPO. That can happen. It took us minimum 8 to 10 months in concluding the deal. So these are very subjective things. So it can happen that you have not agreed on a minimum return. So it can happen. That is not an issue. But generally in larger transactions, they try to put these type of conditions. So can we, Sachin, I think let's move to the next.
Yes, I think yes, you can take up the next topic of, I think, AIFs.
Yeah. So these days there are a lot of fundings which are happening through AIFs, alternative investment vehicle. It's basically. So there are three type of AIFs: category 1, category 2, and category 3. And AIFs can be used for equity investment, and it can be used for lending also. So for if somebody has to register,
यहाँ पे यही हो रही है यहाँ पे भी यही हो रही है यहाँ भी अगर मान लो हम यहाँ पे
Sanjeev ji, can you please mute yourself?
yeah, sorry. So there are so AIFs are investing in equity also, and they are acting as lenders as well. So when a category is into a lending business, then they register themselves as category 2 AIF, because only category 2 AIF can get a license for debt funding. So these fundings are generally in the nature of NCDs, non-convertible debentures, or it can be a structured finance. A structured finance can be in the form of loan against shares. It can be in the form of acquisition funding. So let's say somebody wants to acquire a company and they do not have sufficient funds, so they can raise funding through AIF. So recently we helped one of our customer raise around 300 crore. So they acquired one company through NCLT. So the transaction was funded by Kotak. So these type of transactions happen through AIFs in terms of debt. So, and what is the criteria for raising debt through AIFs? So let's say for NCD or for any acquisition finance or something like that. So it has to be in a company format, either a private company or a public limited company. Minimum revenue of a company has to be 100 crore. Company's net worth has to be a minimum 25 crore. Then company has to be PAT and EBITDA positive. And minimum transaction size in for AI funding is 25 crore. So now I will explain the structure of AIFs. So AIF is a vehicle which is made for investors, where they can put minimum 1 crore in the vehicle. And then there is a fund manager who looks after the deployment of funds. And the AIF which is formed, it can be in the form of company or LLP or trust. So there are primarily three type of AIFs in India. One is category 1, second is category 2, and third is category 3. The purpose of category 1 AIF is for venture capitalist funds. Second is angel funds. Third is infra funds, and fourth is the social venture fund. So any venture capital investment you see, so it is made in India through category 1 AIF. So they would have a license of category 1 AIF. Then category
आप बॉम्बे में हो ना आजकल? पहले तो आप बॉम्बे चले गए थे, कह रहे थे मेरे को।
Sunil ji, can you mute yourself?
एनीवे, मेरे को कोई बॉम्बे का कनेक्ट दो। मेरे फ्रेंड है, नेवी से रिटायर हुए, कैप्टन है, उन्होंने फ्लैट खरीदा है एलएनटी बॉम्बे के अंदर 4 करोड़ के आसपास का। उनको लोन चाहिए करीब 1.5 से 2 करोड़ का लोन चाहिए। आपके बैंक के नॉर्म्स हैं उसके हिसाब से, तो किसी सीनियर आदमी की जैसे आपने पीछे आरडीए।
चावला जी, इनको मेरा नंबर दे दो, 2 करोड़ का लोन चाहिए इनको। सुनील जी, कैन यू म्यूट योरसेल्फ प्लीज?
और ये है उनकी कंडीशन है कि
So the admin can mute it, please.
हाँ, तो नंबर भेजो, आप नंबर भेजो
राज
मेरे को।
सर, आप कैन यू म्यूट फ्रॉम योर साइड? आई थिंक एडमिन
परवीन गर्ग, कैप्टन परवीन गर्ग, हाँ, रिटायर हुए हैं नेवी से।
I think उनके ऑफिस से they can mute.
हाँ, मेरे पास
चावला-
एडमिन के राइट्स नहीं है।
Admin please
लो,
mute
और
them.
आप लड़के का, ठीक है।
हो गया, चलो, आई थिंक ट्रांजैक्शन उनका। So category 1 AIF is generally used for setting up venture capitalist firms. Second is angel funds. Third is infrastructure funds. Fourth is social venture. So any fund, any VC or any company which is investing in startups, so generally they register themselves under category 1. Category 2 is for Category two is for private equity transactions, for debt funds.
देखिए बात हो गई थी क्या? इसकी बात हो गई थी कुछ क्या लिख सकते हैं?
सचिन जी, एक बार राज जी के ऑफिस में बोल सकते हैं किसी को इनको?
हाँ, मैं ऑलरेडी मैंने मिलाया हुआ है। नोबडी इज पिकिंग द कॉल, गिव मी जस्ट कपल ऑफ मिनट, वहीं ट्राई कर रहा हूँ मैं।
हाँ, आई थिंक उसके बाद एक बार शुरू कर लेते हैं।
एक बात है, वो करने वाला आदमी चाहिए। लोग लगे बैठ
Yes जी, I have spoken to into their office. She is doing it actually. वहाँ नेट का कुछ इशू है. They are getting it logged in again and they will mute them from their side. Meanwhile, you can carry on with the thing. I think now they have not speaking. तो आप कर लीजिए आगे.
ठीक है, so category 1 I have explained. Category 2 AIF is made. So when a person has to invest in private companies, so a private equity fund will fall under category 2. If somebody has to get into a lending business, then category 2 license is required. Then funds of funds where a AIF is created to invest in AIF. So these are the three formats under category 2. Category 3, so category 3 is basically AIF you create when you have to invest in publicly listed company. So a company, let's say, is already listed and you want to buy their shares in bulk, or you want to do trading in their shares. So then you create category 3 AIF, or it is for hedge funds. So these are the three categories: category 1, category 2, and category 3. So now, one topic I have additionally covered, which is who can invest in AIF. It can be any resident, it can be a NRI or a foreign national. So these people can invest in AIFs, and the minimum amount of investment is 1 crore for an investor. For a director or employee or fund manager of the AIF, the investment amount is 25 lakh. So generally, there's a lock-in period of 3 years for investments in AIF, and AIF has no taxability. All the taxability happens in the hands of investors. So, and an AIF can have a maximum number of investors, which is limited to 1,000. So now after this, there are two more topics. One is eligibility for entities for finance through AIFs and repayment terms. So
Yes, ji, we have got couple of more questions. If you can elaborate, what's the difference between AIF and PMS?
sir, PMS is a separate thing. So that is both are two separate things. AIF is a personal vehicle. So let's say you are a group of 10 people and you want to invest together. So then you create a AIF. Whereas PMS is you want to collect small amounts from public, then you go for a PMS license. So generally PMS is for the mutual funds. So then there is one more question on what is the best entity structure for creating a AIF, company, trust, or any other option. So as per me, one should explore trust nowadays because it is under discussion that India will also implement inheritance taxation in the coming years. So considering that, it is good to create a trust in AIF. And provided while creating, so one should study the inheritance tax law, which is already there in US and Europe. So get that a structure can be decided.
इस पे व्हाट्सएप पे नहीं है, SMS कर दो ना आप मुझे, SMS कर दो। बंदा किस लेवल का है वहां पे? ये पवई में ले रहे हैं, देख लो बंदा ऐसा देना जो काम करके दे।
Yes, ji, I'm trying again their office number.
हाँ, नाम भेजो और उसको बोल दो मैंने आपको परमिट वेरिफिकेशन का नंबर भेज दिया SMS पे, उसको भेज दो उनका नंबर और अब उनका मेरे को भेज दो, अभी SMS करो आप।
Sachin, you or Raji don't have admin rights, so that you can just mute this person on your own.
Raj's office bearers have the rights because they have initiated this discussion. So I'm trying.
ऑफिस में नहीं है कोई उनका जिसने इनिशिएट किया है?
कुछ का इंटरनेट का इशू आ रहा है, I believe.
Yes, ji, you can carry on. I had a word with Raj sir only. He's speaking to Sunil ji abhi, right?
ठीक है. So now there are two more topics which are required to be covered. So first is eligibility for entities for finance through AIFs and repayment terms. So eligibility, so it has to be a company. It can be a private limited company or a public limited company. Second, the company has to have a minimum revenue of 100 crore, net worth of 25 crore. Then company has to be PAT and EBITDA positive. And the minimum fund requirement should be 25 crore. So in terms of repayment, the repayment can vary from 36 to 42 months. So this is the eligibility and repayment. Then the last topic is what are the advantages and challenges of raising finance through AIF. So generally, finance from AIF is raised where the company is not eligible to raise funds from bank or NBFC. So it can be from multiple reasons. The company has already taken sufficient loans, and the company does not have additional collateral or eligibility to take loan from the bank. So in these cases, AIFs come into the picture. Second, let's say it is an acquisition finance. So somebody wants to acquire some company. Banks do not give funding for these type of purposes, as it is not a RBI mandate. Then you reach out to AIFs for acquisition. So this is called acquisition finance. So in case of loan against shares, so you do it through AIF. So when normal funding is not available, let's say funding from banks or funding from private equity or equity, so then you try to raise money through AIFs till the time you do not reach at a scale. Then after that, obviously, you plan to raise equity and lower your burden with the debt. So in terms of challenges, generally fundings from AIFs are unsecured, but promoters have to give their personal guarantees for raising a loan from AIFs. So that is the only challenge which exists in case of default. So it will impact the CIBIL, but there is no collateral as such. And there are certain AIFs which provide funding only on the basis of hard collateral. So it is again a subjective matter. So it can be collateral can be in the form of FD. The FD can be like 25% or 30%, or it can be a hard collateral. So it totally depends on AIF to AIF that what is their mechanism of giving loan.
Okay, Yashi, we have got question that is PE funding and AIF funding can be done in trading concern also.
No. If it is just a trading company, it is not possible.
And then another question from Vaibhav Garg. Sir, can you please re-explain the personal guarantee point of directors in terms of AIF default?
So personal guarantee of promoters has to be there. So they have to sign the agreements and all. So in case they make a default, it will impact corporate CIBIL and as well as CIBIL of the promoters.
But Yashi, what kind of default they can do? I mean, because
Sir,
they are now the equity holders. I mean, AIF also
no.
works as
Sir,
a
नहीं sir, जो AA funding है ना, so that is in the form of debt.
right. Okay.
हाँ, हाँ, that is in the form of debt. NCDs is a debt, is a type of debt.
What is the normal ROI charged by AIF?
Starting, let's say 15%, if the profile is good, then it can go up to 18, 20, 22. So generally the range you can say 15 to 22.
Right. And they another question from Ankur Kumar, what type of business they fund?
It can be any type of business. There's no, they are all sector agnostic. As I mentioned, the revenue has to be more than 100 crore. Net worth has to be minimum 25 crore. PAT and EBITDA positive. And the structure has to be a private or public limited company.
But will not be trading concern, right?
Or trading, it depends. So we get a lot of companies like they are into steel trading or cement trading. So these type of businesses do not fall for any investment or debt. It is very easy to create companies in these type of businesses. No? You can create a company and you can easily do a business of 400-500 crore in these type of companies.
Right.
So you need to have your product. So then Ankurji is asking not the sector business, kindly give some example. It can be manufacturing, it can be pharma, hospitals, it can be infra, real estate, solar, IT, it can be anything, it can be any sector. Schools are also eligible, yeah, we can look at it, there's no issue. Defense also, yes, GZ has mentioned defense, yes, defense is also eligible. Defense, then drones, everything. So these type of companies are also eligible.
Harshit, don't you think that schools are generally formed under trust? So, I mean, they are not a non-profit organization. So why AIF will, fund to them?
Means a private limited company. The first condition is it has to be a private limited company or a public limited company. So if it falls under that, then only the funding will come.
Right.
So now Rajni is asking, can SMA2 company get debt funding? Yeah, SMA2 can get a debt funding. So then Nitin is asking AIF Cat 1 funds. So these are two separate things. AIF is totally separate from REIT. So under AIF, real estate is one of real estate can be one of the fund. So REIT is specifically for real estate. So these are two separate things. There's no comparison of AIF with the REIT. So then Vaibhav Garg is asking, personal guarantee for directors is attached only in AIF category 2 funds. Yes, because it is a debt fund. So in case of only debt, the personal guarantee becomes applicable. Otherwise, it is not required.
Yes, ji, I'm going back into this question from Rajni Buddhi Rajaji, where she has asked, can SMA2 company get debt funding?
Yeah.
So SMA2 companies are, I think, companies where the overdue is more than 30 days, rather 60 to 90 days, if I'm not wrong. So can they get that funding?
Sir, if it is at an initial stage, that can be looked after, but not like very delayed payments and all. If it is a one of our default, we can look into it. There's no issue.
Right. Generally, banks averse these kind of customers.
No issues, no issue. Okay, we can look into it through AIF. But other conditions have to be satisfied. So everything has pros and cons, which are these in Mainboard IPOs and bank funding. ये एक बार आप ही explain कर दो सचिन जी, ये अरविंद जी का question है ये.
Sorry, I missed it. क्या question है? Everything have pros and cons, which are these in Mainboard IPO and bank funding. So I couldn't get actually what exactly he wants to ask.
Basically, benefits and challenges for bank loan and Mainboard IPO.
That depends, I think, on the psyche of the client, the particular company. If they want to grow far and grow more, I think they should go into IPO only. And if they think that all the profits should come to them, and the profits are very large and they are certain, and the bank funding is they are getting at say 9%, 8.5%, then I think they can get into the bank funding. But the larger the exposure, I think they should go into IPO funding.
The Mainboard company has like a benefit is you get access to funds and you unlock value of your shares. And the only challenge against IPO is now there are certain reportings like a quarterly PNL and you have to do certain things as per the SEBI norms. So which we believe is not much of a headache. So once you have done the reporting for 2-3 quarters, you get used to it. So we don't feel that there is a challenge or in raising funding through private equity or IPOs. So anyway, if you're running a private limited company and operating at a scale, you need to do all those compliances. So then one of client is AI IT company having turnover 7 crore and EBITDA is approximately 1.5 and looking for PE funding. Do we have normal and non? So this is a very small company for private equity funding. So as I mentioned, it has to be a little mature company. This is too small a company. So this type of a AI IT company, it is eligible for funding through HNIs or through venture capital firms. Or I would suggest that you apply on a one program based out of the US, Y Combinator. So if you get through it, it will be really great. I believe they take 7% equity. So if you get selected over there and they give you $5 lakh, and then they invite you to the US for good 2 months, you have to go there and live in the US. Then the one day, so it is called the demo day. On demo day, you can raise funding from excellent promoters. You'll get to meet promoters like founder of Gmail, YouTube, and very excellent type of founders. So if it is a good product in IT, you should definitely apply for Y Combinator.
It was Y Combinator. What you said, sir? Sorry, I couldn't get
Y
it.
Combinator. Y as in Y, Yash ka Y, Combinator, COMBI, Combinator, NATOR.
Right. Thank you, sir. Thanks a lot.
Yes, ji, another question from Rajni ji. SMA2 client with CIBIL of 10. 10
Civil
means
of
10
as in
CMR 10.
नहीं
And
CMR 10
so I am clear that bank will not fund. What about
नहीं
your?
नहीं नहीं CMR 10 तो कोई भी नहीं कर पाएगा सर. CMR 10 को तो अब छोड़ दो.
Can we make the WhatsApp group on this topic? Yes, I think we can make.
Yeah.
I think if we have any questions on this, we can continuously be in touch with each other.
Yes, we will request Raj sir to make a group out of it.
Correct. Anything else, Yash ji, if you would want to?
So I have explained all the topics. I have covered everything. So in case anyone wants to ask anything or anybody has a query for private equity funding or any fundraising, so I'm happy to help.
We have still some time remains. If anyone has any question, they can ask. Maybe they can unmute yourself and ask themselves and ask, or they can write it down in this group.
So apart from this, I'll say, so there is no shortage of capital in Indian market. So you can raise any amount. Okay, so provided the company has to be good, and they need to have a scope for expansion. So capital is not a issue in Indian market. So you can raise up to any amount. We have been investing in a lot of companies every year. We are investing in 15 to 20 companies. So every month we try to at least write 1 to 2 checks. So I believe in today's time, capital is not an issue.
I think anyone who has got any client or any of the known person who wants to get into the IPO and start private equity funding, they can connect ESG also later on.
Yeah.
Case to case discussion can be done. That would be healthier discussions rather. So I think we should sign off as of now. If ESG, if do you have anything else? If
Nothing from my
share.
side. So there's one question from Bhumika. Bhumika ma'am, I'm not expert in seed fundings, especially government grants, and also there are separate consultants for that. So my area starts where the funding is at least 40-50 crore, and we work in with companies who are looking for funding at a growth stage. So we don't deal in seed capital, and we don't deal in stress capital.
Yes, ji, we have got another this thing, a question from Fuljit Singh ji. Can we elaborate on valuation principles?
So valuation primarily is decided on the basis of P multiple, price to earning ratio. So that is first and foremost fundamental for valuation of a company. So then there are two things under P. One is when you are listing your company, the P multiple can be different. Or when, let's say, you are listed and it's been a while, the P multiple can be different. So, and there's a reason for that. So, P multiple for a listed company, which is already listed from, let's say, 6 months, 1 year, or 5 year, can be higher. But when you come for a listing for a new company, the P multiple will be lower. So the reason is, so if a company is already listed, the share trading happens every day. So in case of a listed company, the trading can be of 1 lakh share, 2 lakh, 10 lakh, 20 lakh shares. But when you list your company on exchange, okay, so you have to sell crores of shares. So crores of shares cannot be sold at the same P as of a listed company. So in that case, you have to reduce your P multiple and look at the P multiple when the companies got listed. So basis that you come to a conclusion that what should be your P multiple. This is number one. Number two, but when you're comparing yourself with peers, so there are two things. So let's say you have a turnover of 500 crore, then you have to make a peer group of let's say 400 to 600 crore type of companies. You cannot start comparing yourself with a 5,000 crore turnover company or a 10,000 crore turnover company. So P multiple of that company will not apply to you. So you have to look for peers in your sector. Number three, so let's say there is a difference in profitability between your company and the peer group. If it is higher for your company, the P multiple can be higher. If it is lower, the P multiple can be lower. And so in case the profit is higher, so it needs to be justified why the peers are not able to achieve that kind of profit, why your profitability is higher, or what unique proposition we have because of which we are able to generate higher profit. If it is justified, then we can claim a higher P multiple. So next question is, how can we assess the P of a startup? Sir, P of a startup. So generally startups are not valued on the basis of P's if it is a loss-making startup. So their valuation mechanism is very different. So some time back I was sitting with a founder. He raised a good 1,500 crore in 2, 3 of the startups. So their fundamentals of valuing the company is very different. So he was doing just $1,000 a day and in cosmetics, and he was comparing himself with NICAI. So he's like, NICAI is doing 1 lakh orders a day. At 1 lakh orders, NICAI is valued at 1 lakh crore. So at 1,000 orders, he should be valued at 1,000 crore. So their fundamentals are very different. So generally, fundamentals of startup valuations are very different from PE investors and IPO valuations. And in IPO, you get the lowest valuation. And in VC valuations, generally you get the highest valuation. So yeah, obviously, sir, it has to be discounted cash flow. The valuation for all the companies on the basis of discounted cash flows only, because we value the business, not the asset of the company.
Thanks, Yash ji. I guess we have uh, done, and it was, I guess, it was an enriching experience for all of you, including me.
Thank you, thank you.
And hopefully, we'll be conducting these kind of sessions. And thanks to Raj Chawla ji also for
Yeah, I was
conducting
not
these kind
here.
of things. Yeah, he's not.
Yes, thank you, Sachin ji, and thank you everyone for joining for the session. It has been lovely interacting with everyone. And in case any help is required or there is any query, we look forward to talk to you guys. Thank you so much.
Thank you.